Let's discuss two economic indicators that reflect the level of economic activity in the country. First off is the June auto retail sales. As we know, the Indian auto industry has faced multiple challenges over the past few years, especially with the onset of COVID-19, then the Russia-Ukraine war, which led to steep increases in crude oil prices, and of course, the global semiconductor shortages. Now, despite these challenges, the industry has shown growth and signs of recovery. In June, automobile retail sales jumped 10% year over year to about 18.6 lakh units on robust sales volumes across passenger vehicles, tractors, and two-wheelers to some extent. But despite a 10% growth in June, auto retail sales has seen an 8% month-over-month dip. Overall, we think the long-term outlook for the auto industry is positive, but we are a bit cautious about the near-term future. According to the Federation of Automobile Dealers Association, the reduction in FAME subsidies for electric vehicles is affecting the sales of EVs. The passenger vehicle segment is also facing challenges like too much inventory and mismatches between supply and demand, which is affecting their profitability. However, there is hope for a boost in sales during the upcoming festive season, which starts at the end of August. Now, the two-wheeler market, which includes motorcycles and scooters, will also continue to face economic pressures and supply challenges according to FADA. Now, in our previous discussions, we mentioned that the rural areas are still struggling to recover economically. The higher cost of owning a vehicle due to price increases and higher interest rates, along with inflationary pressures, is affecting the demand. Additionally, factors like adverse impact of El Nino on rural consumer sentiment are also important things to keep an eye on. So while the auto industry has faced challenges, there are signs of growth and recovery. However, there are still some uncertainties, especially in the near term. Now, coming to another barometer of economic activity, which is FMCG sales. The fast-moving consumer goods industry experienced a setback in both the urban and rural areas in the April to June quarter of fiscal year 24. When looked at the trends, urban sales growth declined by 4.7% and rural sales dipped by about 4.6% compared to the previous quarter. Now, this took the overall sales dropping to 4.6% for the quarter ended June. Now, in the category-wise breakup, beverages and personal care exhibited double-digit declines. Home care and commodities were other categories that showed an increase in sales. Now, we see consumption patterns have been subdued due to inflation impacting consumer demand. Now, this can be observed in the lower spending on discretionary products. Rural sales, which constitutes over a third of FMCG sales, has also remained sluggish. We believe the consumption trends in the second half of this year can see an uptick provided the monsoon season goes well and inflation remains contained. While I say this is me, Merlin Sadana, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com